Hello, everybody, and welcome to another edition of CNF Talks. I'm delighted to have with me today Ashar Qureshi, who's a partner at Fried Frank. Ash is going to be speaking at our Future of UK Capital Markets Regulation Summit in London on the 11th of November. Welcome, Ash.
Thank you very much. Very kind of you to have me.
Very good to have you with us today. You recently wrote a very interesting article on whether the listing regime reforms will arrest the apparent decline in UK stock markets and restore the glory IPO days. Do you think they will?
Look, I think if I may, sir, the reforms are incredibly thoughtful and in many ways welcome.
Yeah.
And I think every financial market should be looking constantly at ways to evolve and modernize. My anxieties are twofold. One is, in of themselves, I don't think they go far enough. And, there are sort of a variety of areas we could point out to. They haven't really, really addressed and completely eliminated the bifurcated nature of the UK listed market because, we continue to have obviously both the legacy companies remaining on transitional arrangements, but also, a different segment for foreign companies listed abroad, which again flirt with this concept of a secondary listing.
Yeah.
And at the same time, and this may be for somebody who comes ultimately from an Amero background in terms of training, they haven't really fully addressed the issues around the sponsor regime and if it works or not. But I think but in some ways, I think the issues are outside the remit of the type of reforms that these are, and inherently perhaps the FCA's. And we are looking at the need for broader reform. And I'm going to park the one issue that we can't talk about in terms of reforms is, are there enough viable candidates for a robust IPO market coming out of the UK financial ecosystem, which I'd love to be able to wave a magic wand and tell you what the solution is. But, even in my most, shall we say, hubrisy moments, I don't think I'm going to get to that one. But, I do think what is still necessary is significant financial reform of the tax and other systems, which we just aren't seeing. The UK equities ISA was a great idea, but why aren't we looking at more comprehensive reform or return to forms of pension investment and dedication of pension funds to the UK public markets? Why is it that when you and I put our money in our SIP, somebody takes that money and puts it all in America?
Yeah.
Right. And I think secondly, we need to look harder at tax and what kind of breaks we're going to give people. The new capital gains regime, albeit necessary, is obviously not going to be great news for the market. But really, should we be giving the average Joe and correlated? Because I do think it's unrealistic to expect a complete withdrawal, and a complete free pass for capital gains for UK equities or UK listed debt instruments. But should we be looking at an expansion of the benefits afforded to pension saving and long-term saving to incentivize people, either by bigger amounts up front being tax-free or tax delayed, or greater sort of latitude on capital gains, coupled with limitations on the pension funds, etc., and where these investments are invested. Look, in theory and abstract, I think it's completely right that I should be allowed to invest my pension wherever I so want, or wherever I think I'm going to get the best advice. But on the other hand, there is a tax break involved, and you've got to look at what else you can do, and therefore the more libertarian impulses I might have are at war with what I think is best for this market.
Very, very interesting. I mean, there are a number of points that you raise there. Obviously, taxation is one, and the tax break as being a facet of why people should look at where pension funds invest and why perhaps one might be able to tilt them towards a greater allocation to UK equities. But do you think that in total, if I may ask, that your view of the budget a little bit last week. Do you think that's a negative for the UK equity market, particularly for retail investors?
Look, I haven't spent enough time going through it with
Mm,
anything like the depth that would make it a truly informed
yeah,
response. But my gut, from what I've read and seen, yes, it's an,
yeah, yeah, yeah,
or if not a negative, a series of lost opportunities. And,
yes,
what I find strange or distressing, sir, is that we have all these uh, people, both from the political universe as well, sort of lauding the current round of changes that we've made or we've seen. And I think they are to be lauded in many ways because every initiative and as we discussed earlier, every modernization is great. But, people have got to put their money where their mouths are, right?
yeah, yeah.
And I don't see the government doing that or
Mm.
putting our money where their mouths are, as it were.
Absolutely, and particularly we're going to achieve a growth strategy, which is the central aim of the government. But of course, there is anticipated to be a major announcement around pension reform coming up fairly soon. At least that was trailed in the papers. But one other thing that you mentioned was, that the supply side of high tech, high growth companies as being a fundamental that's required for a really healthy IPO market. And interesting enough, I was interviewing someone who runs an AI company
Mm-hmm.
about that very point recently. And that was what he was saying, that we need to find a better way to foster and grow such companies. Do you think it's just that? Or do you think that there's a major difference in the culture between the UK and the US market, or between UK investors and their understanding of technology and the understanding of technology amongst US investors? Or is it a conflation of the two?
I think it's a conflation of the two, sir, if I may. I
Mm,
think that it's hard to criticize the UK or European institutions, educational or otherwise,
mm,
and say that they're not generating the ideas because the ideas are there.
yeah,
And you're finding so many UK um, pre IPO or pre unicorn companies being snapped up by the Americans or
yeah,
the European investors, right?
mm,
I think there's a complicated set of issues. Um, I think fundraising, particularly private fundraising or interim fundraising in the UK, is not as easy,
mm,
and the investor market isn't as evolved, nor are there as many sources of capital in the United States,
mm,
which really, if I may, creates a sort of very focused microcosm or
yeah,
universe in places like Boston and Silicon Valley for the trajectory
mm,
of some of these companies.
mm,
And I'm including biotech, not just conventional sort of computer tech or high tech or the stuff that I claim to be a Luddite about
yeah,
earlier on before I could get on this.
mm,
Um, so I think there's that challenge, sir, of how do these companies in the interim raise money? Is there an investor base out there domestically, or is that
mm,
investor base out in the U.S. so it's better for me to travel?
mm,
There's obviously some element of the mythology of American success.
mm,
Um, I think that in overall, partly because you have more dedicated investing entities and a
yes,
greater focus and greater success,
mm,
the level of resource that they're willing to dedicate to understanding and
mm,
therefore their appetite for risk around these assets is greater.
mm,
And I also think, frankly, um, the cultural affect around compensation is different.
yeah, yeah, yeah,
I'm going to build up a really big company and then I'm going to be hoisted by a bunch of investors for
mm,
making a lot of money. You're not going to get that. You know, the
mm,
classic European and UK entrepreneur does not see the IPO as a rite of passage,
mm,
right? Certainly, some of the bars, the 25% initial public vote, etc. These
yeah,
reforms and other reforms have really dealt with over the last, you know, 3 years, sir. You'll know
mm,
this better than I. But that rite of passage issue involves things like compensation. It involves things
Yes,
like,
of course. Yeah.
you know, and so it's both more challenging for me to get to that point of being able to IPO my company. But then why would I IPO it to be expected to be torn down or for
Yeah.
me to be torn down? And I think that that's something, you know, that's a more complicated cultural and
Mm,
political issue that's not going to
mm,
be fixed overnight.
mm,
Um, and there was a fascinating study of about the number of times that there had been significant resolutions and voting down of compensation
mm.
proposals in UK AGMs. And, you know, it is an issue. We may
Yeah.
not want to talk about it, but it still remains an issue. And whether it's actually borne out by the facts, because, you know, I'm sure there've been some evolution there. The fact
Mm,
that people think about it as an issue is going
mm.
to constrain their choices, because these decisions are, while we all love to say, you know, completely logical, they're also about sentiment
Yeah.
and perception of fear, right?
So yes, I mean, I fully agree with all of that. I think if you're an entrepreneur going for an IPO, you put in huge numbers of 7-day weeks, working virtually 24 hours per day, and there has to be on offer a decent reward, and you don't want to be torn apart, as you say. But the cultural issues and that point about targeted expertise and having the scale of markets so investors can have that targeted investing. These are things which can't really be easily changed by legislation or a change in regulation. It's going to take a lot more time, isn't it? So, whilst the reforms that we have in the UK, as set out by the Capital Markets Industry Task Force and what the regulator is doing, uh, it doesn't sound, in your opinion, as though that's only going to take us a little step forward. Is that right?
I think that's right. I think the first thing that will turbocharge this is pension and tax reform, because, you
Yeah.
know, give people additional incentives, right?
Mm,
And we've got more money just being directed irrespective, or
mm,
money that's in pension pots and being put elsewhere being redirected.
yeah.
Um, so I think that gives you an instant impetus. And look, there are lots of reasons why, um, you know, Brazil and Poland are not to be pointed out as being stellar examples. But,
Mm,
you know, they use those kind of tools to very significantly turbocharge their public markets.
yeah.
Now, there's probably some long-term issues with the relationship between the private and the public market
Mm,
that, you know, also are going to redound to why equities and public debt aren't coming back as quickly as one wants. Because, you know, we've talked about some of the cultural or societal or analytical hurdles,
mm,
but there's also the rise of the private capital.
yeah.
Now, I don't think that people have stopped doing IPOs because there's private capital. I think private capital has certainly played a decision tool in the way that, you know, private equity has chosen to pursue um, the narrative or the progression of some of their assets. But again,
Mm,
it's not an ultimate solution. It's a deferral trade, right? Because you still
yeah.
got to get the money. You still got to get the equity and make your return through the public markets, right?
Mm,
But I think private capital, in my view, complicates the public markets, but doesn't obviate the public markets and shouldn't
mm,
obviate the public markets, because it's ultimately not a endlessly recyclable and liquid
yeah.
system. It wouldn't be private if it were, right?
Mm, yeah. I mean, that's true. And maybe do you think the private markets, in a sense, uh, step into the breach and help deal with a fading of the public markets in the sense of developing companies to at a certain level of their transition and growth to the point where they are suitable for the public markets? Do you think that is a reflection of the public markets perhaps not working for smaller companies?
No, I don't think that happens. I don't
No?
think that I don't think private capital is currently doing as much as we think it might be doing.
Mm,
Not private capital, because that's a very, but sort of, you know, the whole thing that we're colloquially referring to as private capital when people talk about it, which is really the
yeah.
credit fund.
Yeah.
Um, I don't think that I don't think that they are, nor necessarily would many of them see tools, um, bridging 100% that transition from small and medium enterprise to mid-sized enterprise. I think they're interplaying very effectively with PE and PE investors and other investors to create a different journey along that. But you're already talking about a company or an enterprise that's attracted, you know, a not a conventional institutional investor base, but a type of professional investor base that's then interacting with private capital. Yes, will they at some point grow more and more into others? I'm sure they will. Am I as well informed as I should be? No, I'm not. So some of this is speculation, and but I don't think that private capital has disintermediated the public equity markets.
Okay. Well, one final question, because I know we're probably running up against the time limit, but there's a lot of concern, as you'll have seen, about the dilution of investors' rights and whether these reforms will dilute the protections that investors have typically had in the past. What's your view of that?
I think there's probably some overt perception of dilution. I mean, the bits of the reforms that I don't particularly like are the ones which seem to give people a pass on information and seem to short circuit disclosure rules, though I think, again, that's not what they really do, because they rely on a robust ongoing disclosure regime. I'm not so sure that ours is as perfect on the ongoing in terms of not the rules, but in terms of the actual disclosure we generate in response to the rules. Look, I think that it's nice. Some of the historical sort of, oh my God, I've got these protections in the UK, were nice to have, but the reality is people vote with their feet. And secondly, it is hard to imagine a company that, has a significant public shareholding actually doing something material without actually consulting or, caucusing its lead shareholders. And, some of the nostalgia that we have for these prior rules is based on a world that doesn't exist, right? It's the theory of the individual shareholder.
Yes.
But the balance sheet of most, or the shareholding of most companies, is large institutional shareholders. And they're not turning around to call you or I, well, maybe they're calling you, sir, but they're not calling me to find out how the 2 pence that I've given them needs to be taken into account as they vote together with other things. In fact, again, and this is a separate diatribe, if I may, the whole concept of corporate governance hasn't, to my mind, fully kept abreast of the fact that, shareholders are increasingly institutional shareholders, that the economic incentive of an institutional shareholder is not 100% aligned with the people who are actually providing them with money, because, the institutional shareholder gets often, or the fund manager gets judged on timeframes that are different from the ultimate investor's timeframes. And, they in turn often disintermediate or devolve voting to a third party who may be very august, but I'm not so sure has a lot of skin in the game, right? So it's do I have a solution in my mind? No. But is it a problem in my view? Yes.
Very interesting. Absolutely fascinating, Ash. I mean, for our viewers, if you'd like to hear further discussion of these and related issues, please do come along to the summit, the Future of UK Capital Markets Regulation, on the 11th of November in London. Further information on our website, www.cityandfinancial.com. Ash, I very much look forward to seeing you at the event itself.
I look forward to it myself.
And thanks so much for sharing those thoughts today.
Not at all. Thank you.